Hello and welcome to the DebtCircle Sundown Brief for 3rd June 2026. I'm Leela, bringing you today's key developments from India's debt and fixed income markets. Let's begin with the corporate bond market. Among listed corporate bonds, the highest traded yield was recorded by Unifin's Capital India Limited at 18.60%, followed by another Unifin's Capital issue yielding 17.25%. Regency FinCorp traded at 16.75%, while Akara Capital Advisors saw trades at yields of 15.90% and 15.40%. In the unlisted bond segment, Branch International Financial Services led the yield chart at 16.25%. Hela Infra Market traded at 15.30%, Empocket Financial Services at 14.80%, and GMR Sports Venture issues traded at yields of 14.55% and 14.42%. Moving to mutual fund debt activity, debt mutual funds remained net sellers today. Gross purchases stood at 13,324 crore rupees, while gross sales reached 22,432 crore rupees, resulting in a net outflow of 9,108 crore rupees for the day. June month-to-date net investment also stands at a negative 9,108 crore rupees. Foreign portfolio investors were active buyers in the debt market. Under the general limit route, FPs invested a net 71 crore rupees. The voluntary retention route, or VRR, witnessed strong net inflows of 2,485 crore rupees, while the fully accessible route, or FAR, recorded net investments of 107 crore rupees. For calendar year 2026, FAR continues to attract substantial foreign participation, with cumulative inflows exceeding 17,000 crore rupees. In the money markets, the overnight call rate closed at 5.27%. Tri-party repo was at 5.13%, basket repo at 5.18%, and special repo at 5.07%. Indicating stable short-term funding conditions. Turning to government securities, the benchmark 10-year India government bond yield closed at 7.03%. The 5-year yield stood at 6.83%, while the 30-year yield remained elevated at 7.65%, reflecting a relatively steep long-end yield curve. Treasury bill yields were recorded at 5.56% for 91-day bills, 5.73% for 182-day bills, and 6.03% for 364-day bills. On the liquidity front, the banking system remained in surplus mode. Net liquidity injection stood at negative 1.23 lakh crore rupees, while balances parked under the standing deposit facility were over 1.40 lakh crore rupees. In the derivatives market, 1-year MIBOR OIS was at 6.13%, rising gradually to 6.64% in the 5-year segment. Modified MIFOR rates ranged between 6.81% and 7.12% across the curve. In currencies, the Indian rupee weakened against the US dollar, with the exchange rate moving to 95 rupees and 71 paise per dollar from 95 rupees and 37 paise previously. The euro traded at 111 rupees and 17 paise, the British pound at 128 rupees and 71 paise, and the Chinese yuan at 14 rupees and 15 paise. Looking at commodities and equity markets, gold remained steady at 15,622 rupees per 10 grams and silver held at 2,800 rupees per 10 grams. Crude oil prices rose sharply to $98.36 per barrel from $93.80 previously. Indian equities ended lower, with the Sensex closing at 74,346 and the Nifty at 23,394. Finally, in the primary bond market, Regency FinCorp announced a 10 crore rupee issue with a 20-month tenure and a coupon of 15%. Asirvad Microfinance launched a 150 crore rupee issue carrying a coupon of 9.10% and a CRISIL AA- rating. Real and Time Heights Private Limited also entered the market with a 95 crore rupee issue offering an 18% coupon and carrying an India Ratings B- rating. That wraps up today's DebtCircle Sundown brief. Thank you for joining me. Stay connected with DebtCircle for the latest updates from India's debt, bond, and fixed income markets. I'm Leela, signing off. Have a great evening.